The hook. The electrical infrastructure boom in India is absolutely exploding. Everyone knows massive names like Polycab or K Industries. But by the time a stock becomes a household name, the biggest gains are usually already made. What if you could catch a rising player right at the beginning? Well, a new infrastructure and wire manufacturing company, Susan Electricals India Limited, has officially filed its papers for an IPO. Looking at their financials, their operating profit just jumped by a massive 228% year-over-year. But wait, before you blindly hit that apply button, there is a massive catch involving state government contracts that you need to understand. In this video, we are going to dive deep into their business model, tear apart their real financial health, analyze the risks, and give you a straight-up answer. Is this IPO a must-buy, or a trap for retail investors? Let's find out. Section 1. What does the company actually do? First things first, what does Susan Electricals actually make? Think of them as the suppliers of the veins and arteries of India's electrical grid. They primarily manufacture two things: winding wires made of copper and aluminium, and industrial cables, which include low-tension and high-tension power cables. These are the heavy-duty wires used in overhead power distribution lines, underground cabling, and inside massive industrial transformers and motors. Now, who is buying these products? This is where their business model gets interesting. They have three main revenue pillars. Number 1. State DISCOMs. These are government-owned electricity distribution companies. Susan Electricals gets these contracts through a competitive bidding process. Number 2. Private EPC contractors. These are the infrastructure giants executing mega projects, building factories, and setting up power grids. And number 3. Traders and wholesalers, whom they supply directly via bulk purchase orders. So, their products are fundamentally tied to India's massive push for rural electrification, smart cities, and green energy integration. The demand is absolutely there. But let's look at the hard numbers to see if they are translating this demand into actual cash. Section 2. The financial health check. Let's talk numbers, because the latest financial reports show some eye-popping growth. Their total revenue has scaled up significantly, hitting into the thousands of crores. But the real showstopper here is their EBITDA, which is essentially their core operating profit. It skyrocketed by over 228% compared to the previous financial year. Why did this happen? It shows what we call operating leverage. As their factory production scaled up, their fixed costs stayed relatively stable, allowing a massive chunk of that revenue to drop straight to the bottom line. Margin management on expensive raw materials like copper and aluminium has significantly improved. However, and this is a big financial warning, because they deal heavily with state government DISCOMs, their cash flow can get tightly choked. Government utilities in India are infamous for delaying payments. So, while the profits look incredible on paper, a lot of that money stays locked up as receivables for months. Keep that back of the mind warning ready while we look at the IPO structure. Section 3. The IPO details you need to know. If you want to apply, here is how the deal is structured. The company is coming out with an issue of 55,42,000 equity shares through a book building process. The face value is 10 rupees per share, and the minimum lot size for retail investors is fixed at 1,000 shares. But take a close look at how these shares are being shared among investors. Unlike mainboard IPOs where retail usually gets 35% and institutional buyers get 50%, look at this structure. Qualified institutional buyers get only 15%. Retail individual investors get 35%. And non-institutional investors or HNIs get a massive 50% allocation. The registrar for this issue is Mudra RTA Ventures Private Limited. The massive allocation toward HNIs means big-ticket investors are going to drive a lot of the action and potential subscription hype on this one. Section 4. The honest pros versus cons. Alright, let's break this down honestly into the ultimate bull case and bear case so you can make an educated choice. First, the bull case. The tailwinds for this sector are phenomenal. India's power consumption is hitting all-time highs every summer. The government is aggressively pushing to replace old overhead wires with safer underground cables, and every single renewable energy plant built needs massive amounts of heavy-duty cabling. Susan Electricals is perfectly positioned to ride this multi-year wave. Now, the bear case, and do not ignore this. Two major risks here. First, tender reliance. If they fail to win government contracts in consecutive quarters, their revenue growth could abruptly stall. Second, raw material volatility. Copper and aluminium prices globally have been wildly unpredictable. If commodity prices spike heavily and Susan Electricals doesn't have strict price escalation clauses built into their active contracts, their super high profit margins could get crushed overnight. The verdict and call to action. So, what's the final verdict? If you are a high-risk investor looking to capitalize on India's power sector boom, the explosive operating profit growth makes this company incredibly tempting. However, because of the cash flow risks tied to government clients, it might see some volatility. Personally, I'll be watching the subscription numbers closely on day 1 and day 2 to see how the big institutional and HNI players react before making my final move. But what about you? Are you planning to apply for the Susan Electricals IPO, or are you going to sit this one out and wait for listing day? Let me know your strategy down in the comments below. If you found this breakdown helpful, hit that subscribe button, smash the like button, and share this video with your fellow investor friends. As always, this video is purely for educational purposes. Make sure to do your own research or consult a SEBI-registered financial advisor before investing your hard-earned money. See you in the next video.